Well, let's turn now to our top story, which is earnings season now in full swing. With a shaky bank backdrop and cautious economic mood, let's take a sector-by-sector look. Here with more, Yahoo Finance's Brad Smith. Hey, Brad.
Hey, Rochelle, great to see you here. As we kick off another trading weekend, you know what that means. Yes, the earnings season rolls on. Of course, we had some of the big banks, plus Delta Airlines, and a little bit of a shock drop from American Airlines last week. But now this week, we're zeroing in on a few big names here. I've got the NASDAQ 100 pulled up, as one of the themes is going to be the early tech trade, and particularly some of those are Dow components. Now, IBM is going to be one of those companies that we're going to be watching for later on this week. As of right now, kicks off this week down by about 0.2%. But one of those other big names is going to be Netflix as well. That one, of course, within the NASDAQ 100. And for Netflix, we're going to actually be looking for revenue to come in at about $8.18 billion, with EPS coming in at $2.89. That's some of the expectations, some of the key themes, of course, to keep a close eye on, as the company has already started to enact some of the cost mechanisms for themselves as it comes to pricing tiers, not just on the advertising model side, but then also on cracking down on password sharing and account sharing. So with that in mind, keep a close eye on some of those subscriber numbers, as well as how much they continue to spend. Another company that we're going to be keeping an eye on within tech, Tesla here, and we're taking a look at shares there. You're seeing those down by about 1% year to date coming into this report. You're seeing it higher, 50% year to date. And then additionally, it's important to keep in mind two big themes for this company. One of them is going to be not only EV demand, but at what price here, because that is where they have really kicked off this pricing war within the electric vehicle landscape. And then additionally, on the front of Tesla and Elon Musk, what they have to signal about that profitability on the back of some of the deliveries, the production figures that they've been able to already announce over the course of the first quarter in 2023. The expectations there, just briefly, 23.43, we'll round it off, $2 billion is what they're expected to see in revenue based on consensus estimates from Bloomberg. And then additionally, EPS, that expected to come in about 86 cents a share for Tesla, which would represent a move higher on the EPS front by about 2% year over year. Also going to be keeping close tabs on the banking sector as well here, which I know you're going to be talking a little bit more about, but just to preview Bank of America, we're going to have a little bit more of a deep dive on this later on this week. That's actually expected to see two big themes to really pull through for it. Look for retail, look for the health of the consumer. Of course, as we've gotten even more of that commentary about the health of the consumer and the resilience of consumer accounts, we've already started to see that come through from companies like JP Morgan. But in this particular case, what makes Bank of America that much more important is it being perhaps the largest consumer-facing type of bank. And so with that in mind, continue to keep an eye on Bank of America shares. The expectations there is actually for an EPS growth year over year of about 2%, and for revenue to come in at $25.32 billion, with EPS, earnings per share, coming in at about 81 cents. I can't read my chicken scratch on my own notes, but about 81, 82 cents on an adjusted basis there. And then lastly, I'll just leave you with Procter & Gamble. Of course, one of the components that we're going to be tracking closely as we move on throughout the rest of this week here. But PG, here on the day, you're seeing that up by about 0.2% year to date. It's down by 0.2%, though. And so we'll see exactly what the company has to say around pricing for some of those consumer goods, where they're still seeing volumes move through. That's going to be a key word to perhaps Command F or Control F within the earnings report when that comes through. And then additionally, on the supply chain management, there's this larger talk about if there is or determining rather inflation versus what some have called greedflation, even in some of the prices continuing to remain higher, though some of the largest impacts of the supply chain that have impacted prices in the past have mitigated themselves. So it'll be interesting to see where some of that risk has abated, at least for Procter & Gamble, and how that sets the tone for some of the other CPG companies out there, Rochelle.
A really interesting look at how all these indicators will add up as we look at the health of the economy and the health overall that we'll see with earnings season. Great stuff there for us. Our very own Brad Smith.
Yeah.